Good morning and welcome to the Pirate Traders live stream. My name is Charles. Today we're going to be talking about the ES, the S&P 500 futures, and the NQ, the Nasdaq futures, and where we think they're going to go today and maybe in the days ahead. The thing that I use to analyze the market and give me an edge in my trading is what we call market profile charts. Market profile is a chart that you see on the left side of the screen over here, and it basically just allows me to see the market in 3 dimensions. Being able to see what's happening in 3 dimensions helps me to make predictions about what could come next and where things could change. All right, so diving right into this morning and what I expect. Bigger picture, I'm bearish, and I assume this market wants to go lower. However, there is a lot that happened yesterday in the way the market traded that makes me think today is going to be a very choppy sideways day. My assumption is we're going to spend a majority of the day today between this area around 57.50 and this area up here around 58.30. Okay, my guess is we're going to do a lot of chopping and a lot of sideways and a lot of grind right here. As a matter of fact, if I'd have been the one to choose, I wouldn't have even gone live on YouTube today because I have a feeling it's going to be kind of a bit of a boring morning, just chopping around in this range. But of course, you guys chose today. Last week, we had 100 people hit the like button. And so I said, if we could get to 100, I'll stream again next week and you guys can choose what day, and you chose Wednesday. So I think you may have chose kind of a boring morning for talking about what's happening live in markets because I think it's going to be a lot of sideways this morning. However, I do think that by the end of the day, the market's going to test the lows. Okay. It's going to come down here and it's going to test the poor low that it left behind yesterday. So let me just take a moment to put all of this in context. While I'm talking, the market is going to open, but I'm not super worried about that because I think it's just going to grind up and down for a little while anyway. So I'll just keep talking. Okay. So first and foremost, let's put everything in a longer term context to understand what is going on with the market. Okay. We have momentum down. So now the market is open. We have momentum down on every time frame. These are what the daily candles look like. And you can see we have momentum down on those daily candles. We have momentum down on the weekly candles, right? 3 weeks in a row, momentum down. We have momentum down on the monthly candle so far this month, making lower lows. Okay. So that's a lot of momentum down. That is the market saying absolutely for sure we're done going up for now. And the next question we ask ourselves is, okay, if we're done going up, what comes next? Do we just go sideways at higher prices, or do we need a larger pullback with price? Right? That's always how the market balances off what we call excess. The market gets too far, it gets overly long, and it needs to cool off. It needs to give new participants a chance to want to also go long. Okay? And so it can go sideways or it can pull back with price. We think about that pullback with price like putting the market on sale, like making it available at a discount so that people who maybe wouldn't be willing to go long at the highs because they thought it was too expensive, now maybe feel like they can't miss it. They got to go long because it's just such a good deal. It's so cheap. It's so affordable. So at this point, because we have momentum down on the daily, the weekly, and the monthly, in my mind, that confirms the fact that we are not going to bring in buyers by just going sideways at higher prices. We are going to need to put the market on sale. We are going to need to bring in those discount shoppers if we want to get the momentum to get back up. Okay. Now that's a very long-term context. I'm saying that's what's going to happen over the next few months, right? So what we need to worry about right now, because we're day traders, is like, what's going to happen today, right? What's going to happen in today's actual market where I'm going to be taking trades? Who cares about what's going to happen over the next few weeks, over the next few months, right? Well, if we're looking at that context, yesterday was extremely confusing. Okay. Why was it extremely confusing? Let's expand out the profile and we'll talk about it. Well, first off, we had a lot of momentum right from the open to the downside. This market just sold right off, but it did something unusual. It came very, very close to repairing a weak reference but didn't repair it. So that's a sign that we don't have as much momentum as we might have thought to the downside. If we couldn't even get to that week reference at 57.38. Okay. So the market turns around. C period, it's just kind of going sideways. D period, it tries to poke down and get to that weak reference that needs repair. But what happens again? It can't. It can't get down there. Now it's forced to reverse right at the low. That creates what we call a poor low. So now the market on the second half of yesterday had two magnets pulling on it at the low. Plus, it had momentum on the daily time frame. Like we talked about this. Everything is bearish, right? Everything is going down. We had all this. But then what did it do from that poor low? What did it do? V-shaped recovery, basically straight up. So at that moment, when we're back up here and we're near the highs in the second half of yesterday, what you should have been thinking as a trader is bigger picture. Maybe the market is hammering out a low here. Bigger picture, we're bringing in buyers and this is bullish. But then in the very last half an hour, what did the market do? It turned around and it liquidated right back down. That is bearish to see. Now, normally we would think about a liquidation break as bullish, but in this case, it's not because the momentum is down. They tried to create momentum up and it failed, which means the momentum is still down, right? The sellers are still in charge of the market. So when I see the market is going to open this morning, I know two things. I know one, the highest probability is that at some point today, the market wants to come down here and try to get below 57.44. But I also know there's some kind of buying happening here. There's some kind of defense. Maybe it's artificial. Maybe it's market makers protecting options that they've sold. Maybe it's, a strategic buyer somewhere out there that's buying individual stocks because they're on a discount. Whatever it may be, somebody is defending this area right here. And so if I think bigger picture, the market is coming down to the low, but I think there's a lot of defense happening here. What is the most obvious thing intraday today for the market to do? Well, to keep poking at it, to keep trying and trying and trying to get through that support to get to that low. Okay. So that is why my thought process is that we're going to bounce between this area and this area today, probably for hours. We're just going to keep grinding through this area. Okay. If we can get back above this node, we'll call it 58.30. If we can get back above 58.30, we can start to get short covering, right? Anybody who was shorting up here, anybody who was shorting in the overnight, if today's market starts to get up there, they can all get squeezed and we can start to create some momentum higher. But we can't do that as long as we're below this level. So the highest probability is that that will hold as resistance and smack us back down. So that's why I'm choosing that area specifically as the area to look for resistance, to come back down, look for support, to go back up, look for resistance, support, resistance, and so on and so forth. Okay. So then you say to me, all right, Charles, I hear you. You're expecting a choppy morning. You're expecting a few hours of just grinding up and down and driving everyone mad. But you think we're going to break the low. So do you think we're going to make some massive, huge move to the downside today? To that, I would also say, no, I do not believe that is going to happen. Okay. Because the market, just this move on the second half of Friday was so intense. The move in the M period yesterday was so intense. I have a feeling we're not going to get a third round of that here today. That probably, even if we get below yesterday's low, my guess is, and again, it's way too early to be sure, right? My guess is the lowest will probably go is around 57.24. Okay. I don't think we're going to have some massive sell-off today. Now, if we get down there and we get more selling and more selling and more selling, well, then I'll change my mind, right? But my assumption today is we're going to chop around inside yesterday's range for a while for, a big chunk of the day. We're going to poke below yesterday's low at some point in the day and probably get a little bit of a liquidation, a little bit of selling there, but probably not that much. And then we close somewhere around yesterday's low. So that's how I see it. Any questions on any of that? If you're wondering, how did I come to these conclusions, please ask in the chat so that I can explain in detail, as there are people here listening to me right now who have no idea what I'm talking about. They're just seeing a bunch of stuff on a chart. It's so confusing. And I'd love to help them have a better understanding of what I see. All right, so there's a survey, last chance right now. What do you think the market is going to do? Up, down, or sideways? I feel like I should have probably ended the survey before I did my speech, because now you're all going to side with me. But I am genuinely curious. What do you think right now the market is going to do? We're at the opening price. Is it going to go up today? Are we going to close higher? Is it going to go down? Are we going to close lower? Or are we just going to go sideways? Sideways it is. So 38% calling for sideways, 33% calling for down, 28% calling for up. So you know what that means. The chat is literally completely divided. 50-50, one way or the other. And that tends to lead to very choppy sideways days when there's a lot of differing opinions about what the market is going to do. There's going to be a lot of people going long and a lot of people going short. And so we get sideways. We get chop. Good morning to Jay. Traders, it's a beautiful hump day in the trading paradise at the big casino. Vu, good morning to you. Tommy is here. Welcome, welcome. Will in the house. Good morning. Zach says, yo ho, a pirate's life for me. Yo ho, a pirate's life for me. Kevin, good morning to you. Welcome. Frito is here. DNK in the house. Zach L, good morning to you. Sook is with us. Nor Auto Trading in the house. Good to see you. Jay says, Charles, add another cat call down and then back up. Did I make a noise? Scott says, preach it, Charles. We're going to do the choppity chop dance all day. Thursdays best or Fridays because of expirations? Do you mean in terms of getting, directional moves? It'd be interesting to look at that. I think Edgeful has a way to actually look at the data, because I remember I was surprised. I used to think that was the case, that the best days were Thursdays and Fridays, and I think Edgeful was the one. Oh, I gotta log in. I don't remember my login. Anyway, I'll look that up later, because I think when we looked it up on Edgeful, it was actually surprised to find that Thursdays and Fridays are actually the biggest consolidation days, and actually the days with the smallest ranges, least likely to make new highs or lows for the week. Okay, so right now we have momentum up. We have a good low. So the question we're asking ourselves is, do we get resistance, right? Pretty much anywhere along this line I'm drawing right now. So anywhere between 58.17 and 58.26 should act as resistance. Boop, and poke and send the market back down. Once we get that resistance, the next question we ask is, how far down does it push the market? Does it just push it halfway to what we call the halfback? Well, that would mean that it's probably going to turn around and take another poke at the high. Or is it able to push it all the way back down through the opening price? Let's see what happens. And obviously, if we don't get any resistance and we just pile right through, that would be very bullish to see, but not likely in my opinion. Looking for resistance and a slap down. Resistance and a smack in the face. Good morning to Arjit, Billy K. Zach says yesterday. Zach says yesterday did emotional damage to me. Yesterday was crazy. It was really crazy. Both the move up from the lows, which wasn't unheard of, right? It's not uncommon to make a poor low and then start, a V-shaped recovery straight out of there. But the fact that then it all completely shat in the M was quite a surprise. But, everything is just news driven right now, so we have to get used to that. Nap in the house, good morning to you. Fighter Pilot is with us. Welcome, welcome. The Bull Baron says there should be a short-term bottom at least pretty soon and a bounce. Yeah, I can get behind that. So what is interesting to me about the current location that the market is in on a longer term chart is that we are back in a previous balance area. So this was a balance area right here. This was a balance area right here. And then look at where yesterday's low is. Right at those balance area lows. Okay? So that just tells me, even if this market, and I do believe this market wants to make a move lower, again, over the weeks and months ahead, even if it wants to do that, it'll probably go sideways here a little bit. And that could give it a chance for a bounce back up into resistance. Absolutely. But we'll take it one tick at a time. First, let's just see if we keep making lower lows on the daily, in which case it's not ready for that to bounce yet. And then let's see when we can make a higher high on the daily. Carlo says P shape. Are you talking about the overnight profile? Yes, the overnight profile was a P-shaped profile. And yesterday's profile for the regular trading hours was a B shape. It was really a bell-shaped curve, but we'll call it a B shape. That's just a sign of a lot of uncertainty. The B shape tells us it was more longs liquidating that caused the move up yesterday. As the market made that V-shaped bottom and it started to go up, it kept liquidating longs and liquidating longs and liquidating longs, and that's what caused the move up, more so than new money selling. And the exact opposite here in the overnight. More of this momentum would have been shorts, people that were shorting, getting out of those shorts was causing the market to go up, than necessarily new money buying, which would have kept the market up. And so we have chop, we have sideways, we have grind. All right, so we are at the halfback at the same time the ticks are at the zero line. If the buyers want to take another poke at the resistance above, they should turn this into support, which they are not. So the chop continues. The support would have been the bounce off the zero line, which we did not get. So that increases the odds we're going to pass through the opening price. Passing through the opening price, if we do, increases the odds that we're going to get to the overnight low, and then we'll start looking for support down there. We got 94 people hanging out, only 43 likes. Please smash that thumbs up button. You might feel like it's a waste of time. You got to move your hand over the mouse. You got to find the little thumbs up. You got to push the button on the mouse. It's a lot. I know. It's a big ask. But it really helps out the channel. It's your way of telling YouTube that I'm dope and that they should send more people my way. So if you can push that thumbs up, I sure would appreciate it. I sure would appreciate it. I do declare he sure would appreciate it. I don't know what's happening, you guys. Something's wrong with my brain. I say something is wrong with his brain. Good morning to Sook 230. Welcome, welcome. DNK says, I voted down, but I also think we will range until the last 30 to 60 minutes before we break yesterday's low. Boy, that would make me very disappointed, DNK. I'm perfectly happy with ranging. I'm perfectly happy with testing yesterday's low. I don't want to have to wait till 3 p.m. for it. Nor auto trading. Thank you, brother. Appreciate you. Frito says, I voted down, but I'm positioned long in a swing. It's not a terrible pace to go long for a swing, but I think you're early. And I do think your swing is just going to be a dead cat bounce as well, by the way. Zach says gamma will go up closer to expiration, right? Which forces the market makers to control the volatility more aggressively. Yes, theoretically, that is true. Never comes with any guarantee. Remember, if Trump says something right now, if he suddenly says, oh, we just found out there's no fentanyl coming from Canada, so we're going to lift all the sanctions. You know what I mean? The tariffs. Like if he were to just say one thing, what's going on with market makers in the option market means nothing, right? Just everything instantly changes. We get tons of volatility, massive, huge ranges. So just take that into context when you're looking at the market through that lens. Is that, yes, in a normal behavior of a market, that would make sense. But at this moment, like anything can happen at any second. So keep that in mind too. Good morning to Grizzly Bull. Welcome, welcome. Sheena says, Charles, can you please go over the tick chart? Yes, I'd be happy to. So essentially what the ticks are measuring is buyers versus sellers on the underlying assets. So the actual NYSE stocks, right? Are there more people going long buying those stocks, or are there more people going short selling those stocks? That's basically, it's the upticks versus the downticks. Okay. So it's like, is the price moving up or down? So when the ticks are at the zero line, when you see them right in the middle at that zero line, that means that there's an equal amount of buying and selling happening, right? Maybe Tesla's going down, but Apple's going up or whatever, right? Like the same amount of buying and selling is happening across the boards. So that is neither bullish nor bearish, right? The being at the zero line doesn't mean anything. It doesn't mean the market is going to go up or go down. But how you move away from the zero line does mean something, okay? If you start to move lower away from the zero line, it means more of those stocks in the stock market is going down. If more stocks are going down in the stock market, guess what's going to happen in the futures market? The futures are going to go down, right? Because they're correlated. They have arbitrage between the two. So when you see that you're at the zero line and the market starts to go lower, you can assume price will follow and will go lower. Okay? Same thing as what just happened a second ago. Now we're back below the zero line, but a second ago, we pushed down here and then the ticks got below and then they bounced. And they went back up. So what is that telling me? It's telling me people are buying the dip. The price of stocks going down is actually getting buyers to buy those stocks. That's support. So that's where we expect the market to reverse and start heading back up. So when you look at the ticks, you don't look at them like regular candlesticks. Like, oh, they've been going up, so they're going to keep going up, or they've been going down, so they're going to keep going down. You look at them in relation to the zero line. What are they doing in comparison to that? Now, if you're heading in a certain direction and you're trending, so let's just say we were to start, candle, lower, 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 that is as bearish a signal as you could possibly get. All right, so as I said, passing through the opening price increases the odds we're going to test the overnight low at 57.78, and then we'll look for a bounce once we get below there. We'll look for support to come right back up. So sometimes the ticks can actually make it really easy because they trend. They're just showing you more sellers, more sellers, more sellers every 15 minutes, just more sellers and more sellers and more sellers. But that doesn't mean that they're not valuable even when they're doing what they did yesterday, which is like, what were they doing? Just crossing through the opening price again and again and again. The zero line again and again and again. So that's still helpful because every time it comes back to the zero line, you can see what's happening. What am I seeing right now? We got below the zero and now we're back above it. Support. They're really trying to defend these lows. Now we know that the highest probability is that they're going to get to the overnight low, but the fact that each time it pokes down, buyers step in, tell us probably once we get below that overnight low, what's going to happen? It's probably going to fail. It's going to look below and fail and pull right back up because buyers have been buying dips for the first half an hour of the day. Over and over again. Look at those ticks. Can't stay below the zero line. Why? Because buyers keep buying. So even though price might be currently going down, this is our edge saying it's looking for a low. It's looking for that magical place where it'll find support and then reverse and come back up. That's the ticks, baby. Ticks be ticking. Okay, so here's the test of that overnight low. This is where we start to squeeze the buyers. The people that were going long in here because they thought the market was going to go up today, now they're getting squeezed. Now they're exiting those longs. But that doesn't mean the market is going to keep going down, right? Because there is a difference between old business, which are longs getting out of their longs, going short, and new sellers, people that were flat going short. So now that we're down below the overnight low, we're asking ourselves, what happens here? Do we get more new sellers that continue to pile on? Or is it just the longs that we're squeezing, in which case we find support and we bounce right back up through the opening price? New sellers is bearish for continuation lower. A bounce is a sign of more chop, more sideways, more grind. Let's see what happens. Great time to look at the ticks. Are they able to get back to the zero line? For the ticks to get back to the zero line, buyers, more of them, have to be buying stocks right now. If the ticks can't get back to the zero line, it means more sellers are selling stocks. So that's how we find out, do we have new selling? What happens with the ticks? Okay. Ticks back to the zero line almost. And we're back inside yesterday's range. More chop. Or sorry, the overnight range, I mean. More chop. So what's the next question in our mind? What happens at the halfback? Does that become resistance? Because now if the halfback becomes resistance, we're taking another poke at the lows. If the halfback doesn't become resistance, we're taking another poke at the highs. The market is in balance, and it's balancing. So that's the game we play. Alvin, good morning to you. Frito says, get the gas company to check for leaks. Listen, if it's a gas leak, I like it. I like this lightheaded feeling. Thomas says, I also voted sideways, but I think we're going to go up, down, sideways, and twirl around. Well, there you go. All right. So this is a reaction to the 10 o'clock news. We're not going to get overly excited here. Obviously, I didn't have a chance to talk about it, but the halfback did not hold his resistance, which means we're heading up into the resistance to look for sellers. What do we assume is going to happen when we get up there? They're going to smack the market right back down. What are we going to be watching? The halfback. And you say, but Charles, the market's moving so fast. Look at it go. As soon as the liquidity comes back, so does the chop. Fighter pilot, as always, appreciate you, brother. He says, if you're not making money, if you're breaking even, or you need to get to the next level in your trading career, consider joining the brigade. Literally will change the way you think and view the markets. Life-changing. Well, I don't know if life-changing might be pushing it, but yes, thank you. It is, to me, a no-brainer. If you are a person who is sitting and watching the market move throughout the day and you don't really understand what's going on. Like maybe you saw some YouTuber tell you to use Bollinger Bands and to go short when you're at the upper Bollinger Band and long at the lower, whatever. But you're kind of like, I don't understand why it does that. Like, why does it reverse here and not here? Why does this happen? Why does that? You need to learn to understand the auction process because that's all it is. Every move the market makes every day is just, are there people that want to buy this market, more of them, or are there more people that want to sell this market? That's it. That is what makes every market move. Why they want to sell, that's another conversation entirely. Where they want to sell, that's another conversation entirely. But it is very simply, do we have more buyers or sellers right now? And when you can wrap your mind around that, no matter what your approach to trading is, whether you're a scalper or a day trader or a swing trader, whether you're trading individual stocks or you're trading indexes or futures or you're trading commodities or whatever it might be, no matter what you trade and how you trade it, understanding the auction process will give you an edge. It will give you moments where you recognize a change. You see that even if things have been bearish, that shouldn't have happened if it was still bearish. So now you can be the first to become bullish, to join the next move, which would be a move up, right? That's what the auction process is all about. And I don't know anyone who talks more about it live in real time, minute by minute throughout the day than me for $20 a month. Come on, get after it. Join the brigade. There's a link in the description. All right, let's take a look at the NQ. Yeah, exactly the same as the ES, just a chop zone. I see resistance above at 24.93 and then 25.46. So pretty much any resistance below 25, 45, 46, any resistance below that area will send the market back down to the halfback. If you get support, you're looking for another poke up. If you don't, you're looking for a poke down. Because it's a chop zone, and they are chopping it up. Nor Auto Trading says, sometimes iceberg orders act as magnets, attracting price movement towards them. Other times, they seem to push price away. What factors determine whether an iceberg order pulls or pushes price away? That is a really good question and a very, very hard question to answer. So I've observed the exact same thing. The only edge that I have found in understanding, what the effects both of icebergs and of just liquidity in general, like just a node of liquidity popping up somewhere, is you have to look at what the market is doing prior to that node and then what changes at the time that that node enters. It's the same for an iceberg or a large node of liquidity, meaning like a dark orange section. So for example, right here, let's just look at this one. What was the market doing prior to this node coming into existence, right? What was it doing? It was heading down very slowly. It started to try to reverse back up, but then it continued that momentum lower. So what did they do? They started to pile on liquidity above. So in this case, odds are they're trying to make it a magnet to pull price to it, right? Because price is going down and they're putting that liquidity above. Okay. So then what does price do? How does price react to that change in market information? The fact that now there's liquidity up here. Well, it turns around and it starts coming back up towards the liquidity, but it can't get there. It starts to turn around and go down again. So what do? They're adding more liquidity. See how it gets darker right there? They're trying to add even more. Like, no, come on, come back up. We know you want to. Okay, we know you want to come back up. Market tries to come back up, still can't do it, so it starts to head lower. Tries to come back up, still can't do it, starts to head lower. So what do? They give up. They go, man, this liquidity is just not working. It's not pulling price to us. So then what does price do? As this gets thinner and thinner right in here, and then of course 10 a.m. strikes, and that's a news move. So to answer your question of how do you know which magnet it's going to be, you really don't. But if you observe it for a minute or two, you can start to get insights. And then it's just a question of, is it still working the way it's been working? Is it still doing what it's been doing? Or does something suddenly change? And the key thing is, when do they pop up and when do they disappear? The exact same thing is true with the icebergs. If you've got an iceberg, let's say we had, an iceberg sitting down here, a green iceberg, and the market is working its way higher, that iceberg is trying to pull the market back down. It's trying to be a magnet to pull the market down. Well, if the market breaks through a certain level and then that iceberg disappears, guess what the market is going to do? Shoot off. That's the tricky thing about waiting for the market to return to icebergs. It works with extremely high probability unless they disappear the iceberg, which is when you're like, oh, fuck, and it happens. So food for thought. I feel choppy, oh so choppy. I feel choppy like I'm gonna get smacked in the face. Okay, so here we are. We're pushing up into resistance, right? We talked about how this whole line right here is potential resistance for the market. Okay, what's happening now that we're poking up into that resistance? We're tapering off with volume. Less and less contracts. We got 5,000 contracts, then 3,000, then 1,000, then only 150. So that is a sign we are running out of buyers up here. So then we look at the ticks. What did the ticks just confirm? Yes, we're back at the zero line. We're back to even Steven. Okay. So now the question is, what comes next? Are we rotating from here all the way back down to the opening price, or do we want to keep poking at the resistance? Well, the ticks will tell us. The ticks are at the zero. If they bounce and go up, it means we're taking another poke at the resistance above. If they start to go lower, it's a sign we need to pull back down to the halfback. Let's see what happens. What did they just do? Went lower. Means we need to pull back to the halfback. Ba-ba-da-ba-ba. We chop, we chop. Ba-ba-da-ba-ba. We chop, we chop. You guys chose Wednesday for me to go live, okay? Don't be mad that there's nothing for me to talk about. Percy, yellow to you. Welcome, welcome. John Q says, I haven't seen any of my setups yet. I'm just going to trade based off of feeling now. You're trying to trigger me, John Q, aren't you? You're trying to get me to have a big, angry outrage attack. Obviously, don't do that, right? If you don't have a trade set up, just don't trade. Definitely don't trade based off of feel in a chop zone. Because, of course, that's the point of a chop zone. The reason it keeps chopping is because it feels like it's going to do one thing, but it does the opposite. And then it feels like it's going to do the other thing, but then it does the opposite. So, yeah, you almost got me, John Q. Almost got me. Woosah. Woosah. Tommy says, I sent you a DM in the Discord. When you get a chance, please check it out. Oh, Tommy, you can slide into those DMs anytime. I'll check it out for sure. Zach says, who would you say is the best trader in Bookmaps? I would leave that question to the chat. I don't really watch the other traders who stream for Bookmap, so I don't know. I can tell you my personal favorite is Markets and Mayhem. Mayhem and Markets. Markets and Mayhem. If you haven't checked out any of his live streams, it's definitely worthwhile. I don't really find anything he talks about actionable for day trades, but he's just very knowledgeable. Like, he has a huge breadth of knowledge about the economy and how it all works and how it's all tied together. So every time I listen to one of his streams, I learn something, but not like actionable trading type of stuff. More just like bigger picture, understanding what's happening with the world type of stuff. Michael, again, thank you for such a nice review. He says the brigade is killer, but he means killer in a good way, not in the like murder way. Been trading for 7 years, and this was the missing piece. Was profitable for the last 2 years, but within the last 2 months, the brigade is life-changing. Again, I'm not sure I love the word life-changing. That might make it sound a little over-hypey. I'm not convinced for $20 a month I can change your life, but I am convinced I can help you with your trading. I am convinced I can give you insights that will guide you. But thank you for the kind review. Zach says, according to Doug and Scott, the answer to that question is that an iceberg is literally gamma. Yeah, I have no context to respond to that. Jason wanted to remind everybody, you get all the singing for $20. You do get all the singing. So, I mean, it pays for itself. I'm telling you, brigade membership. Totally worthwhile. Thank you, Kevin. Thank you, Nicholas. Appreciate you. Scalping Strategy says, Charles, where can I find the tick indicator? So that is just TICK is the ticker symbol. Any, thing that lets you look up, tickers for the NYSE, you should be able to find tick. Holding a fart says, the way you helped me with my trading changed my life. Guys, you're being too nice to me today. All right, so the market is back at the halfback. What are we watching? The ticks, right? We got the resistance, so we knew we needed to come back to the halfback. Ticks are below zero line, so what happens from here? If the ticks are able to work their way back up, it means we're getting support at the halfback, and we'll look for another move up. If the ticks are not able, it means we need a push down into support to look for buyers there. What's it going to be, market? Zach says the iceberg isn't gamma itself. It's an anchor for the gamma magnet. Again, I can't wrap my mind around what you're saying. But this is probably impossible. If you can find the video where they talked about it and post it in the Discord, I would love to check it out and find out more. But I just think of icebergs as being too choppy intraday. Like they're constantly, icebergs appear and disappear and appear and disappear and appear and disappear. So, maybe if they're hedging 0-day options, that's what you're seeing, but I just don't see the direct connection. But if you can find whatever video they talked about that, I'd love to watch it if you can post it in the Discord. Thank you, fighter pilot. All right, guys, I'll take it. I changed your lives. Yeah, I guess what I'm reacting to is I don't feel like I'm the one that makes the change in your life. You know what I mean? Because it is common. I do have a lot of traders who struggle for years. They come to me, they take one of my workshops, and then like 6 months later, they're like, man, you've totally changed my trading. You've reversed everything. I'm making all this money now. And I always feel like it's like, I didn't do it. You did it. You're the one that did the work. I don't credit LeBron James's basketball coach for why LeBron James plays well. You guys are the ones that deserve the credit. You're the ones that did the work and made the change. All I did was just educate. But thank you. I appreciate it. Michael says, if we get below the open again, are you going to be bearish? The answer is no, I am not. I am bearish to head down to the 5760s, to head down here into support right now. I'm bearish to come down to here. But here's where it gets tricky. I can't tell you exactly where it's going to flip. It may not make it down there. It may flip right here and come back up. It may go all the way down near the low and come back right back up. Does that make sense? So it's hard to say for sure. I can say I am bearish here for a move down, but how far down? I don't know. That's the thing about a chop zone, is it can reverse anywhere, because it's not reversing because there is an actual change in the world causing a reversal. It is reversing because short-term traders are getting squeezed one way or the other, and squeezed and squeezed and squeezed and squeezed. And so where is that magical level where people feel enough pain to exit their longs or exit their shorts? It's tough. It's tough to call. So I'm bearish for a move down into support. I am not bearish beyond that until I see what happens when we get there. And in case you guys are wondering how it works with the banners, I will keep either a banner that says chop zone or a banner that says feeling neutral up here until I trust a bias in a way that I think it's tradable. So if I really felt like you could go short now, and I knew where you could put your short, where you could put your stop, and where you could put your take profit, and it would have a high probability of success, then I'd put up a red banner. Then I'd say I'm feeling bearish. But as long as it still says chop zone, it means we are still in a location where the market can flip or reverse at any moment. And so I know it sounds crazy to be like, but Charles, up here, when price was up here, you said we were tapering off with volume and it increased the odds we were coming back to the halfback. Why the fuck didn't you just go short right there and just stay in your short and still be short right now? Because I've been trading for a long time and I've tried that. And then what happens is you get short, it comes to the halfback, and then it fucking squeezes you. And it's like, it's just very hard to trade in one of these zones, in one of these places where even if you can predict the reversal and the reversal happens, being able to predict it tomorrow and the next day and the next day and the next day is very, very hard. So my framework for entering trades, which includes my bias of being bullish or bearish, requires that it will work with a high probability every day, always, right? That's the idea of a chop zone. is that sure, there are trades to be taken in the chop zone, but there's no way to predict the probability of success. And so you'll get a green banner or a red banner when the probabilities favor a move. Right now it's in a chop zone. So probabilities are tough. So here's a perfect example. So I just said, when we get below the opening price, I'm looking for a move lower, right? Let's say you went short. Let's say you put a stop sell right at the opening price. So the market came back through your stop sell. Now you're short the market. Well, where do you put your stop on your short right now? Because if you put your stop above the halfback, you just got taken out. They poked literally 1 point above the halfback just to take out those stops, and now we're getting our move lower. That's a chop zone, right? It's like, where do you put your stop? Because right now, you could be short the opening price. The market could go all the way up to almost the overnight high and still come down to yesterday's low. Are you going to sit through all that pain? Right? That's a chop zone. Is not being able to be certain of the probabilities of success of a trade. And if a trader can just be okay with that, if a trader can open up a chart and say, probably for the next few hours, the market's going to go, 30 points up and 30 points down and 30 points up and 30 points down, and I don't have to do a thing. I don't have to enter trades. I can just wait until there's some clarity. That's when the magic happens. That's when you go from treading water, from breaking even, to consistent profitability, is the ability to be okay with not trading, even if the market is moving 30 points up and down. Because you're in a chop zone. You get stopped out, and you get stopped out, and you get stopped out. And then the market goes right where you thought anyway. Inside a chop zone. Zach says, I did sit through that pain. Laugh out loud. That was yesterday. That kicked my ass so much that I'm shifting any positions today. So here's the cool thing about trading. If you catch those moments, even if it was profitable, so let's say you got short yesterday, the market made this humongous move up for whatever reason, you stayed in your short and you just took the pain. And then the market came all the way back down and you made profits. The market closed down here and you were profitable on your trade. That wasn't a good trade, right? Just because the trade made profits doesn't make it a good trade, because the trade off was the torture that you went through psychologically. That's not the type of trader you want to be. If you want to trade for the next 10, 20, 30 years of your life, you don't want the way you trade to be, you fucking torture yourself all day, every day, right? That is not a good system. So that's how you develop a system. That's how you get better. You say to yourself at the end of the day, okay, maybe I made profits, but I don't ever want to take a trade like that again. So then you're saying, where should I put my stop? What should have been the level that got me out of that short? And then the next day, when you're thinking about taking the same trade, you don't take it because you realize, oh, I'd have to put my stop right there, and I just don't like that trade anymore. And that's how you get better and better over time. Recognize the pain you feel and come up with a solution for it. A technical solution that you can use every time. This is the way. Zach says, this is very true, and I'm concerned a little bit about it because it's not unlike me to grind against hard pain. Yeah, it is one of the many ways that trading is a mindfuck. It just is. It's like everything we were taught as humans is wrong in trading. like trust your instincts. Wrong. Don't fucking trust your instincts. You do the opposite of what your instincts tell you. You know what I mean? Work really hard. The more effort you put in, the better results you get. Wrong. Not true. In trading, often the less I put in, the easier it is, the more profits I make. The harder I work, the more hours I spend staring at the screen, the more trades that I force, the more obsessive that I get, the worse the results. It's actually by doing less that I make more. And that is just so counterintuitive, particularly in terms of time, right? We are all taught that the more time you put into a thing, the more money you'll make. When actually, for me personally, the less time I spend sitting in front of the chart, the bigger my returns. Because all that sitting in front of the chart too long does is get me to force trades, right? Maybe I'm forcing them out of boredom. Maybe I'm forcing them out of anger because the market is confusing me. Whatever. But it's just like, that's what gets me to start forcing trades. And that's bad, right? So the better thing for me to do is to literally just walk away, like go outside, like go away from my computer, and I make more money that way. And it is so counterintuitive to human nature to think less is more. But it is in trading. The simpler you can make it, the easier you can make it, the better your results. It is not about hard work. It is not about, forcing yourself to be tortured. Whereas anything else in life, that's true, but not in trading. All right, baby. We're in the C period. We've got what we will call a small initial balance because we're talking about relative to the last few weeks. This is a relatively small initial balance. So whilst we are still in chop right now, this tells me we should break away from this area and get a little bit of an extension. You guys already know what I think that's going to be. I think it's going to be a move down to yesterday's low. But if they break the B period high now, I would not be shorting for any reason whatsoever. If they break the B period high now, whilst it will probably be a very choppy move, it would increase the odds of a test of the overnight high. So the only short I could take today would be if we started one time framing higher, the only short I could take today would be a look above and fail of the overnight high. However, if we start one time framing lower, I could sell any resistance and accept the risk that as long as we stay, so let's say hypothetically right now, the C period breaks the A period low. As long as we stay below the B period high, the highest probability is a test of the previous day's low. Right? And then when the D prints, as long as we stay below the C period high, the highest probability is a test of the previous day's low. And when the E prints, as long as we stay below the D period high, the highest probability is a test of the previous day's low. That's how you start to stack up probabilities in your favor. So I'm still expecting a very, very choppy sideways day today, maybe even all day long, but I favor a move to yesterday's low. I do not necessarily know how much further it will go. Okay. So I will be doing at yesterday's low what we call monitoring for continuation to the downside. What that means is I'm trying to get short somewhere on the way down, right? I'm convinced we started one time framing, we push back up into the overnight low, we're getting resistance, it gets smacked down, whatever, right? Something gets me short on the way. I take profits at yesterday's low. I then watch the market liquidate because it'll liquidate once it gets down there, right? And then I say, what comes next? If support steps in, then I'm asking myself, do we turn the previous day's low into resistance? So let's say, hypothetically, the market comes like this, it's going sideways, boom, it breaks that low. If it comes back up and it turns the previous day's low into resistance, I could be bearish to head down to the next week reference. If it does not turn the previous day's low into resistance, it means that was probably the low of the day. And in my mind, I think that's what's going to happen. I think we're going to get below yesterday's low. We're going to liquidate, make the low of the day, and then come right back up. Okay. So probably going to be a little boring, going to be a little choppy, but there is money to be made if you can be patient. Thank you so much for joining me today. I really, really appreciate it. If you are new to the channel, please consider joining the brigade. It's $20 a month, and I do these live streams for the first hour every single morning. So you're talking about every day you're getting insights about what is the higher probabilities to take place. I'm not going to tell you to go long or short, but I might tell you something that stops you from going long or short in a losing trade, or convinces you to get in a trade you were already planning, but now you feel more confident. If you make even one trade for just 1 point on the ES with just one contract, that's $50 of profit. I only charge $20 a month. That's less than half of what you will make off of one single point on the ES if over the next month I say even one single thing that helps you. The Brigade membership absolutely pays for itself, and I would encourage you to check it out. Once again, thank you so much. If you have not hit that thumbs up button, this is your last chance, and you know it would mean a lot to me. Love to see those likes. Love the new subs. Thank you all so very much. And members of the Brigade, we'll see you tomorrow morning. Thanks a lot, everyone. Bye.